Today, we're going to try and make sense of Archicom, one of Poland's biggest real estate developers, because when you look at their story, it seems like a huge success. But the numbers, well, the numbers tell a really weird, almost paradoxical tale. Okay, so this is it. This is the big mystery we need to solve today. How on earth can a company sell more apartments than it ever has before, but at the same time, watch its profits completely fall off a cliff? You know, it just doesn't make sense on the surface, but as you're about to see, this contradiction is the key to understanding everything about Archicom. And let's put some hard numbers to this paradox. So in 2024, sales were amazing. They sold almost 2,200 apartments, which is a solid 20% jump from the year before. Great, right? But then you look at the other side of the equation. Net profit, it absolutely collapsed, dropping by more than 58%. So more sales, way less money. We got to figure out why. To get our heads around this, let's start by looking at the good stuff. Let's build the bull case for Archicom, the optimistic growth story that gets investors really excited. It's a story all about massive ambition and really smart expansion. See, Archicom didn't just pop up out of nowhere. It actually started way back in '86 as a small design studio. Things got serious in 2016 when they went public, but the real game changer, that was 2021, when the giant company Echo Investment bought them out. That was the rocket fuel. It took them from being a big deal in one region to a national powerhouse. And now in 2024, they're not just part of the group, they are the group's entire housing division. And those record sales we talked about, they aren't a fluke. They're part of a clear, powerful trend that's pointing straight up. And the company is hitting the accelerator, not the brakes. For 2025, they're aiming to sell over 3,000 apartments. I mean, that powerful sales engine is really the foundation of the whole bull case. So how are they going to do it? How do you keep that kind of growth going? Well, this number is a huge piece of the puzzle. Archicom has a massive land bank, enough land already secured to build over 11,000 apartments. Now, in a market where good land is gold and getting permits is a nightmare, having that pipeline locked and loaded, that is a gigantic strategic advantage. It's like a farmer who has fields ready to go for the next decade. And here's the other crucial part. Archicom isn't doing this alone. As part of the bigger Echo Archicom group, it's basically on the biggest residential development team in the country. That scale gives them some serious superpowers, better access to money, way more leverage when they're negotiating with suppliers, and just a bigger cushion if the market takes a downturn. Okay, but that's only one side of the coin. For every bull, there's always a bear. And if you tear your eyes away from those exciting sales charts and look at the company's actual balance sheet, a totally different and frankly more worrying picture starts to form. So let's build the bear case. So we're back here again. But this time, let's look at it with a much more critical eye. This wasn't just a little dip in profits. This was a collapse. Profits were more than cut in half. So while the sales team was popping champagne for a record year, the accountants were staring at a number that should scare any investor. This is the big red flag. And the profit drop? It's not the only problem. The company is actually burning through more cash than it's making. Its debt is piling up. And key metrics, like return on equity, are looking pretty weak. But let's zoom in on one number that really tells you what kind of tightrope Archicom is walking. This number, 1.2x. This might be the single most important number to understand the risk here. It's called the interest coverage ratio. And what it means is simple. For every single dollar Archicom owes in interest on its loans, it's only making $1.20 in profit to cover that payment. That is an incredibly thin margin for error. If their earnings dip even a little, paying their debts could suddenly get very, very difficult. All right, now to be fair, Archicom isn't working in a perfect world. The entire Polish real estate market has been on a complete roller coaster, and every single developer is dealing with some pretty serious challenges. And one of the biggest reasons for all this chaos was a government program called the Safe 2% Loan. It was basically a subsidy to help people get mortgages, and boy, did it work. It was like a sugar rush for the market. Demand shot up, prices shot up. But then the government just pulled the plug, leaving everyone scrambling. It just goes to show how much the market's fate is tied to unpredictable politics. And the problems don't stop there.
On top of all that policy whiplash, you've got stubbornly high interest rates, making it tough for buyers to afford homes. You have these ridiculously long waits for building permits that slow everything down. And of course, there just isn't enough good, affordable land in the big cities. It is a tough, tough environment out there. So, what do we have? On one hand, you've got this incredible story of growth and ambition. And on the other, a story of serious financial risk in a really shaky market. How do we put these two completely opposite pieces together and finally solve that paradox we started with? Okay, here's the solution to the whole puzzle. And it's actually pretty simple. It's all about timing. See, in real estate, you don't book the profit when you sign a contract. You book it when you actually hand the keys to the new owner, which can be a year or even more down the line. So those low profits in 2024, that's just the small harvest from apartments sold in previous years. But those record-breaking sales from 2024, that's a massive crop of seeds being planted. And that harvest of profit isn't expected until 2025 and beyond. So this really brings us to the full picture, where you can see the bull and bear cases are just two sides of the exact same coin. The bull case is built on those record sales, that huge land bank, and the promise of a massive pipeline of future profits. The bear case, it's built on the cash they're burning to achieve that growth, the high debt they're taking on to fund it, and that razor-thin safety margin. It's a classic, high-stakes bet on debt-fueled growth.
Which leaves us with the ultimate question. Is Archicom a powerful growth machine, smartly planting seeds that are about to sprout into a hugely profitable future? Or is it a financial house of cards, taking on way too much risk in a market that could knock it over at any second? The real answer, I guess, will come when that big 2025 harvest is finally counted.